in terms of, and I think even you believe this, that the Chinese economy has bottomed, that we are seeing this stabilization playing through, but we haven't necessarily seen that reflected in a way that would suggest that the growth is on the horizon, more so that we're just evening out in a sense. So what's it going to take for that next step to occur, or are we hoping for that too soon?
Thanks for having me today first, and thank you for the question. In terms of China's growth, I would categorize that as a fragile or soft balance right now. We're actually on a dual track growth, where certain sectors post-pandemic has been faring pretty well. For example, the service sector, to some extent the consumption sector and industrial sector. But there has been strong headwinds, structural headwinds from other sectors, such as the property sector that we have just mentioned earlier. So such dual track recovery is giving market a little bit of a complicated outlook over the medium-term horizon, because cyclical upturn is going to be faced by structural headwinds, and it is more difficult for people to decide where the peak of growth is and how fast that growth recovery is going to come up with. So to the question of what could change this, I think proactive policy stance is definitely going to be helpful. We have seen a couple of proactive policy steps from the policymakers, which to me is a very positive sign that more is to come. The 1 trillion fiscal easing is going to be a very good initial boost to cyclical recovery. And going into 2024, I think there might be more to come in terms of a wider fiscal deficit and the support of the structural sectors, such as addressing local government debt issues and the property sector issues.
But realistically, right, so we've had all of this support, and there's obviously been this pushback against doing what the markets had expected, and a big bazooka package and everything else. But what we're hearing, and you've just suggested this, that there is more to come coming through next year. But does all of that come in time? Because when you have a crisis of confidence, in a sense, like you're having right now when it comes to the consumer side, people not wanting to speculate, people fretful and keeping their money in their pockets. If we were to see any kind of exogenous risk outside of China that then had an impact that flowed through into China in terms of, the end demand market and the like, doesn't that run the risk of just being at the mercy of timing, that it hurts China domestically?
Yes, I think partly you address about the confidence issue, but it's not all because of what we see in terms of growth or a moderate policy package we see right now. But more fundamentally, I think that is a transition of markets' understanding of China's changing growth models. So what China has been doing, as far as we mentioned about fiscal easing and property sector easing, are not meant to re-leverage or rebuild the economy using the old model of debt-driven growth.
But aren't they trying to re-leverage households?
But that the easing that we have seen so far are more of a purpose of creating space for the new economy to get more time to thrive. So as long as we have this cyclical upturn, which gives people the confidence of the policymakers' ability to secure a bottom line of growth, I think that will create more room for the new economy to thrive, which is the consumption, the high-end manufacturing.